Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street ugly hype. Today, April 18th, 2008, a wonderful Friday here in New York, 75 degrees, sunny, beautiful, and it was like that on Wall Street as well. We saw the Dow, the Nasdaq, and the S&P all roaring higher in a continuation of the Wednesday rally, which again we had been calling for multiple days now. And the technicals, once again, guys, they tell the truth. You know, it's not rocket science. It's some mathematics, absolutely. But you guys see from our track record at this point, we've been calling pretty much every market move in this market over the past year plus at this stage of the game with almost exact certainty. And once again, the rally has continued, even when all the naysayers were out last Friday, when the market turned lower and it looked a little ugly, but it just happened to be a flush out, and a beautiful flush out it was, as it turned the indicators just perfectly in unison for a strong rally into Options X. The Dow was up 228 points, the Nasdaq up 61, and the S&P was up 25. Big moves of about 2% across the board on the indexes, and let's just get right into these charts. You guys know how we came to the conclusion of the rally this week, folks. It's no secret. We've been talking about it in these videos. And once again, a tremendous move up. You had Google after the bell yesterday. You had Citigroup this morning. You had Honeywell. You had great earnings across the board. And the fact of the matter, folks, and this is key, is that, and I stress this in the chat room as well, is that it has nothing to do with what expectations are for earnings that are put on paper by these analysts. The analysts have no clue. Frankly, they come to an estimate that seems about right. It's all about what the market expects. Now, Google's estimates were insanely low, and I pointed this out in the chat room, as did my partner Nick. And we said yesterday the chart on Google looks phenomenal, and I mentioned that all this negative news about ComScore and their ad revenue and how it was all slowing, that's been hammered into that stock. And I said, listen, folks, expectations, the bar is low here. Sure enough, Google off to the races, huge move on earnings as they beat handily those expectations. Now, Honeywell, the same thing. Citigroup, the same thing. Expectations were so low here that it doesn't take a whole lot to beat them. But what does this mean for going forward? And this is the key, folks. And with every major Wall Street firm out there, and we're talking about major cap, large caps that actually affect the market, not some little small cap that won't have any play, but with every large cap stock out there that comes out with better than expected earnings, it raises the bar for the next company. So next week we have Apple reporting. Well, guess what? The rally over this past week here now has raised the bar on Apple a little more than it was. So they're going to have to do a little better to continue up and to continue this rocket rally, and the bar continually gets raised. And this means that the psychological nature of the market, and this is pure psychology and so forth, is getting raised more and more. People's expectations are growing, and there's going to be an inflection point where if this continues, then the expectations get too high and companies start to come in underneath, and then the market reverses back down once there are too many bulls on board. This is pure and simple psychology, and it's a beautiful thing, but that's the way the market runs, guys, and that's how you have to understand it from a psychological point of view. Then you add in the charts on Google, and let me flip to Google, by the way, guys, and I just want to show you this. Nice move up, right into the 50. We knew that would pull back. We actually called that move down in the video. Consolidation, and blast off. It doesn't get much more simple than that. There's a lot more facets that we noticed in this chart that we don't go into in these videos that told us that was going to probably happen. But we always stress we don't play earnings because the moves either way are just so dramatic that you can get into a lot of trouble that way. But in any case, nonetheless, beautiful move, pull back, blast off. Now ISRG, and we mentioned these charts yesterday. Near the high end of the chart, you had it double top. Look at the double top there. That's signaling to me in this chart that the downside is more probable than the upside, and it's all about putting probabilities in your favor. And today, down $60 on ISRG, Intuitive Surgical, on earnings. So it's just a matter of putting the odds in your favor by understanding enough of these facets and enough of these different characteristics we follow, whether it's psychology, whether it's price pattern time, whether it's our mathematical formulations, our proprietary things we've developed. It basically raises the odds of success of these plays very high. And you guys can see that by our market calls, obviously. So let's get into the ES on the intraday. Today, not a lot to say. I'm not going to go into a lot of pattern here because there frankly wasn't. It was in a bull mode. We had a big move up here, basically move up here into the 9 o'clock hour. You had a small pullback, another bull run here where they squeezed the shorts. And then in the afternoon, you got profit taking. There's not much more to say on this chart than that. Volume was okay. we mentioned the light volume of late, and that's been a characteristic we've seen. We did about 2 million contracts today, which is average. But on a market day where you rally this heavily, you should have more volume than that. But again, we talked about redemptions in hedge funds, a lot of money being pulled out on the sidelines, and that's another indicator, folks. When it gets to a certain point where enough people pull their money out, the market's going to rally because that's too many bears. And that's also indicating that a lot of people are going short. So it's a lot of stuff going on here in our analysis techniques. But long story short, that's what you had today. Push, pullback, small pullback, pause, push again, and then profit taking into the close. Now let's get a little look at the daily here, because this is where it gets fun. Where's this market going? Everyone wants to know where this market's going now. You guys, we've had people say, okay, in themoneystocks.com, Gareth and Nick and all your other partners, you guys have done amazing analysis here, called almost every move over the past year in the market, whether it's the bull rally, the pullbacks, the this and that, the move in January was called to a T as well, the bounce and so forth. Where's this market going from now? Because everyone wants to know. Well, we first of all want to draw on our trend lines here and do the proper analysis. And there you go. Now you can see here, you connect these lines and you had a breakout above this trend line. And again, we talked about the head and shoulder pattern and the beautiful nature of that pattern. All right, and here's the other shoulder, very tiny shoulder, but nonetheless breakout. But remember, the market now has had a big push. And what do we talk about after a major move in the market? Consolidation, right? So you had a move from this point here to all the way up to here. That's a big move. You're talking about S&P points on the futures. That's, let's see, approximately 1325 all the way to topping out at around the high of the day, 1398. So you're talking about 75 points on the ES, on the futures move there, and that equates to almost the same on the S&P. And you have to have a pause or a pullback at this stage of the game, guys. You may have some decent news, but remember the bar's been raised now. So what we'd like to see, and what most likely will happen, is you're going to have a pause, pullback. What you want to see is that hold around this trend line. If it dips a little bit below, okay, that's okay. Because look, you have the necktie moving averages here. Now they're diverging. Again, the 20 is moving up faster, obviously. But you have the moving averages right below, so that's good support again. But in any case, right around this trend line you want to stay so it keeps that breakout in play. All right? Then should we get continued movement up, you're basically looking for next resistance somewhere in this line here, and then after that it would be the 200 moving average here. And we'll go on the SPY and look at the SPY a little closer here. Same chart on the SPY for the most part. We can draw on our trend line here for the head and shoulder inverse, and I want to be correct on that. It's an inverse because it's upside down. Here's the head underneath with the shoulder up here. Otherwise it would be head up here, shoulder over here, over here. All right, so inverse head and shoulder breakout here, and again you closed here. You have a gap to fill here also, so at some point we wouldn't be shocked to see that gap fill. But somewhere around this trend line here you want to stay. And again, you have the moving averages of support moving up underneath. Now, again, we break below that moving average, these two moving averages, then we reevaluate. But as long as we stay here with the 20 moving up like this, the 20 will continue up like this, right into this breakout line. The market should have some good support. But I want to stress again that expectations now have been raised. The market's now not looking at a 50 basis point cut anymore as much as a 25. So they're beginning to think the economy's a little better. And what happens when more people think the economy's better? Well, then expectations are too high, and obviously we have to have a little bit of a pullback so people kind of say, oh, wait, maybe we're going down. And as soon as people say we're going down, then we go up. It's pure and simple like that, but it's obviously a lot more in-depth with the analysis that must be done. Okay? So keep that in close mind. You're still looking at a beautiful chart. I mean, there's so many technical points on this chart, whether it's a double bottom there, you had a WV patterns, MA patterns left and right, head and shoulders in this chart. It's a great learning chart, and I do want to encourage everyone to take the webinars that we give. We're going to be doing another one in a couple weeks, so email us if you're interested, and we'll set you up and get you on the line with us and get the picture on your screen. All right? Let's see what else. Let's take a look at the NASDAQ as long as we have a little more time in this video. And same thing going here with the NASDAQ. You can see the nice little breakout. But on the NASDAQ, what we want to watch here is, an area where we could also fill a gap in here. You have good support down here as well. So we'll have to keep a close eye on these charts. But, it wouldn't surprise us to see a pause or a small pullback coming into early next week before another possible move in the market. We're not looking, remember, the major move may be over now. There still may be another push in this market, but a lot of the rally we've called is already coming out of this market. And you're talking about a rally from this point here where we stood. By the way, Bear Stearns was right in this area. I believe this is where we told everyone to go long on that Bear Stearns news, and look at the move. You're talking about a close to a 5 to 10% move in the NASDAQ from that point call at inthemoneystocks.com. All right, guys. So again, keep in mind you have a little area here where we want to see consolidation. Maybe even a gap fill would not be a horrible thing. Back down. Sideways trading is always good. Light volume consolidation. You guys know how we think by now, obviously, and we'll continue to follow the markets. Last couple things, folks, is these videos we will probably be undoing them at some point and not putting them up anymore. So I do want to encourage institutions out there and people and individuals that want to do the private consulting to contact us and secure some consulting services. Obviously, once the videos are off, we won't be able to get this information out to you as much. It won't be for a while. You'll still be a little more time, but I just want to give everyone forewarning so those institutions out there can give us a buzz and make sure to have a spot with us as we expand the company and really get into the proper calls on this market. All right, so contact us at support@inthemoneystocks.com if you're interested. We're always here to help, folks, so come use it, and we'll talk to you on Monday.